Hey Jeff, thanks for joining me.
Hey, Steve.
Hey, we are talking about investors moving back into real estate, some more interest in commercial real estate. This is from a new report from Colliers. They're showing investment in the multifamily sector that's increased. There's about 38.8 billion in multifamily assets that were traded in the second quarter. They also pointed to the industrial sector as getting more attention from investors. Um, we have seen like retail actually kind of activity slow down a little bit there, but the sector is still really healthy. And that
Mhm.
just kind of pretty much leaves office, which is still struggling a bit. Most of the activity in office is it seems to be around a lot of lenders and special services and maybe taking advantage of some properties that are struggling for folks to kind of swoop in there. Um, but some positive data from Colliers. It seems like with the Fed cutting, the 10-year and mortgage rates coming down a bit, interest rates down a bit, the economy continuing to chug along, that people are getting more interested in commercial real estate.
Yeah, I mean, look, I think there's probably a lot to unpack in this one. And primarily related more to economics. It's probably the best way to put that. Typically when you see large rate cuts, there's some negative indications from that, and coupled with all the inflation, real estate's a good insulator. So it allows you to essentially retain some of the value of your dollars without losing it to all the inflation. So it's not really surprising to see investors coming back. I think it is kind of it's one of those things where we'll see what happens probably, or see more of what happens after the election. But I think in terms for the actual asset classes, I think a lot of that really kind of relates, as we kind of always say, it's really kind of market driven. It's not necessarily related to the market overall, where people are having trouble, or where people are doing exceptionally well.
Yeah, another data pick here is Colliers reported that about 20 billion in industrial assets traded in the second quarter, and the average price there increased 8% year over year. So that does seem to be some maybe excited about the manufacturing base, the more
Yeah.
industrial side of things, where we're seeing some more enthusiasm. And then we've been talking a while here in regards to the kind of affordability crisis, the need for housing. Multifamily, I don't think it's a surprise to us to see that doing strongly. And I think our expectations would be that these trends have legs.
Yeah, 100%. I mean, I think you kind of hit the nail on the head with that one. But the other side too is, especially in the industrial, you mentioned it with some of the, I guess you could say, reshoring of manufacturing coming back makes sense. I wouldn't say the industrial, industry as a whole. There was a lot of new development that went there, over the last couple of years, and there's still quite a bit of opportunities that are out there that are still sitting vacant. So you gotta kind of be really careful with what you're looking at.
Yeah, and I think it's always something we point out is that this national data only takes you so far.
Right.
Regions, different local markets, suburbs versus urban cores. There's all variances there. I think we could just take retail as an example where things look pretty negative for the traditional mall. I mean, you're really
Mhm.
looking at that traditional mall as kind of more of a lot of times some good real estate that you're going to want to repurpose into something else.
Yep.
But at the same time, we're seeing retail in the suburbs, people wanting to shop closer to home or even pick up things they've ordered online closer to home. We're seeing the high end where it really involves, luxury goods that people want to touch and feel. I mean, we've actually seen some data in places where the number of customers per square foot's gone down and the sales per square foot's gone up. Retail is a pretty good example for what was doing well maybe 30 years ago isn't.
Right.
But new things are doing well and there's new opportunities there.
Well, yeah, I mean, and to your point, I mean, also retail is going to be this ever evolving asset class, just because of and I hate to say it because people will always want to jump to the comment, but the internet does change things. I don't think it, again, as we've always said, it didn't kill retail. It probably won't kill retail, but it'll change the players in real, in retail of, how big they are, the type of products they carry, and, and to some degree where they're located. So yeah, I think it'll be interesting to follow this and see where it goes, and we'll have to look, probably do a year-end video about this as well.
Yeah, we'll do a deeper dive on everything, including office, which is also a place where you've got divergence between different classes, different urban cores, different regions,
For
the
sure.
suburbs. So there's, office. Anybody who told the story that office was all about remote work came and it killed the office. It would be great if real estate was that simple. But a lot of variance there too. So yeah, we'll be talking about all those. Hey, if you enjoyed the video, give us a thumbs up, subscribe if you haven't already, and visit our website, selectfincap.com, and get on our newsletter list to get weekly news updates on real estate and also get an opportunity to invest in exclusive commercial real estate investment
Yeah.
opportunities.
Comment, tell us what you think as well. If you disagree, tell us. I'd love to have a debate.
Thanks a lot. Thanks a lot. Talk to
Thanks,
you soon,
guys.
Jeff.